Welcome everyone. This is Ivan from Crowdcreate. I have today Miko Matsumura from Gumi Ventures, and excited to share. We were on the NFT Global Conference stage. You were one of our keynotes. We had some really interesting topics we covered, and I know even before this we've already jumped right in. But yeah, let's get right into it. Like, everybody knows you. You're a thought leader. Every time I have a chat with you, it's always insightful. Always makes me go back to the drawing board. I think that's a good thing.
I appreciate that, Ivan. And, one of the things that's really taken off for us is the NFT space. So you guys are very thoughtful and getting ahead of that. I think thank you for putting on the NFT conference. Gumi GCC, my fund, was actually lead in the early rounds at OpenSea. So like for us, we definitely have been thinking about the emergence of this space. The Gumi game company is actually the publisher of My Crypto Heroes, and so we definitely have a lens through which we see this, which I think originally was a bit of a gaming lens. So in a sense, that's kind of how we think about durable community and utility, right? So we start to think about how NFTs can be more than, it's so interesting because I think art is more about like being, and I think that gaming is a little bit more about doing, and the thing that's so interesting about NFT is kind of how to bridge these worlds and how to connect these worlds. But, I think that's kind of how we got into this. And, I think our next big venture is like YGG in this non-fungible space, right? So, that's the yield guild. And, we see that there is a huge potential for there to be effectively a dominant labor union, right? So, one of the ways we reason about YGG is, why should there be a big one of these, right? So whenever we make an investment, we always ask ourselves, well, why does the world want there to be a big one, right, of these? And in the case of OpenSea, it's like, well, gee, why does the world want there to be a big search engine? And if you just look at Google and what happened with, the first internet search engine, they weren't the first. They were the number 11 viable search engine, but they ended up dominating the space, right? So, the question becomes like, does the universe want there to be a big one of these? And, our rationale around OpenSea was, well, yes. So then the question breaks down towards things like, well, why would this be the winner, right? And in a sense, what we saw on the team was just this incredible drive and like this huge networking power where they just reached out and they just cold reached out to every single early player in the space, right? So in a sense, we looked at this team and we were like, these are people that really are awake. They're awake to the potential of NFT. They really want to form these early connections with everyone, and they just want to build this like big, deeply interconnected village of NFT, and obviously it's scaled to become a metropolis. So like, they don't know everyone personally in NFT anymore because they index over 20 million NFT assets, right? So it's no longer a village. But
Miko, I love that. And I've been following OpenSea. I know there's a lot of platforms that are launching things on OpenSea.
Yes.
But kind of what you talked about just now is so fascinating. You said, they got a hold of everyone early, cold outreach to everyone, first mover advantage. Like, how did they do that to you? I'm so curious.
It's just been astonishing. I mean, in a way, we were kind of creating our own luck, right? Because for us, we actually, I met the team at Crypto Underground, which is my San Francisco meetup. So in a sense, they're just part of the community, and I kind of immediately got excited. My general partner in Tokyo is kind of a hardcore gamer and blockchain gamer, and he took his game company public, and they published some pretty big titles like Final Fantasy on mobile and their own IP called Brave Frontier. So he actually really, really understood it. Like he immediately got it. And so with that kind of foresight and with that kind of team, it becomes sort of easy to get this seismic reading of the future of this space, right? But I think for me, when we talk about kind of why does the world need a yield guild, right?
Let's unpack that. I like that, because yield guild, after the NFT conference, for me personally, me and my co-founder Jeff, we did a deep dive. We actually spoke with the core team. Awesome. We had like 4 meetings trying to get into that round. Like, I just see that as the future, and not just And I know we talked about earlier, it's not just gaming, like the concept of, replacing someone's income and the opportunity is massive.
Yeah, agree. And so then the question kind of comes down to, there's two questions, right? Just like before, one of the questions is like, why is this the team, right? So for me, obviously, Beryl and Gabby, they've been long in both the crypto space, blockchain space, as well as the gaming space. And Gabby was kind of former president of the Game Developers Society of the Philippines, so he's an OG. He's definitely been doing gaming his entire life, and he's been serious about it. So I think he really deeply understands free to play. He understands all the business models. He knows all the developers. He knows how to identify good games, good game titles, good game studios, good game communities. So he's definitely like a profound expert. Obviously, Beryl is a tremendous expert in economics, both financial economics and crypto economics. So it's sort of this really amazing kind
dynamic
of jobs,
duo,
Wozniak. Yeah, we look for kind of business founder, domain founder, so we're looking for this kind of magic combo. So, I think the team is, A plus, and that's one of the reasons we think they're going to win. But the final thing we have to ask ourselves is, does the universe want there to be a big one of these? And, I think my inspiration is kind of labor unions, right? Because the bigger the labor union, the more collective bargaining power they have, right? So if you look at YGG, they have, they're going to have more collective bargaining, right? And one of the really recent and very exciting things that they announced is, I think it was even today that they announced that they are doing their first kind of like merger. So, I think that's really exciting, right? So what it means is that, the thing that is important to understand about YGG is that, they have a kind of a powerful token economic. And so they have essentially a tracking token that produces kind of a embodied network effect, right? And so that network effect can be used by adjacent guilds, right? So in a sense, YGG isn't a guild, it's a guild of guilds, right? So for example, Visa Axie scholarship program just merged with YGG to bring, another 200 Axie scholars, into their program, right? So the thing that's exciting about that as a first step is that, it's going to be a guild of guilds, right? And it's not going to just be, a singular guild, right? And the thing that's interesting about that is that, if you have kind of a way of tracking as a unit of, account, the value of the network of the guild of guilds, then you have a reason for it to be big, right? And in a sense, the idea becomes, there should be an ambitious one that has kind of the value capture mechanism in the token. Because if there is such a thing, then you really don't want to beat that one. You want to join it, right? Like, because in a sense, it becomes kind of a bit of a fait accompli, right? In terms of, getting ahead, being a first mover, and then like taking over.
But you're saying like they're a guild of guilds, so that kind of puts them on top, and you're asking yourself like, hey, is there really a need to have one big one? Yes. But technically, you're going to be investing at like the upper layer, and other ones will be built within underneath. Is correct, the idea.
Correct. So the idea becomes that it sort of is a function of like M&A, right? Where that the acquisition capital for M&A is embodied in the token, right? And so basically they use the token as acquisition capital to integrate partner guilds, right? So if there's a strong guild in a game, right, then they can basically like offer that umbrella to the guild, right? And that gives kind of collective bargaining. Because the thing that's important about this idea is that part of the mechanism of collective bargaining is the opportunity and ability to collectively bargain with a game publisher, right? And one of the things that you can do, for example, is you can say things like, well, we have the majority of the players of your game, and we actually would like to take all those players to a different game. And we'd like to take them to a different game because we feel like the other game is more fruitful for us. It's better. The economics are better for our guild members. And, but we'd like to negotiate with you first. Like we'd like to tell you that, we have a list of requests. We'd like your game economics to be a little bit more favorable for play to earn, pay to or play to earn, right?
Yeah.
So, so we're negotiating on behalf of our group.
Yeah.
So the point being this, right? Which is, let's say you have a guild that's in a game. If you have a guild that's in a game, your power to go to another game, it's almost like kind of a mass migration. Whereas like, if you have a guild of guilds, you can actually make it more like a diaspora. And what I mean by that is instead of saying all of us, the only way we can stay together is to move to an adjacent game all at the same time collectively, right? And that gives you collective bargaining power. Whereas if you're a guild of guilds, you can basically be like, well, we're going to take 50% of them who want to move to this other game and they're going to go to that game, but we also control all these other games too, right? So then you can take them all out. You can take all the players out because all the players have a game that they prefer that they would go out to, right? So in a sense, like it becomes easier to say like, unless you can meet the needs of the guild, we have plenty of places to go and we're going to offer really good places to go for all of our guild members, right? Because guilds don't control their membership, right? But they can incentivize their membership, right?
Yeah,
so
it's kind of like power to the people, right? I see this trend as like you're giving power back to these communities, and we saw it with, I think it's really starting to migrate over to the gaming world now with like NFTs, guild games, but it's a fascinating transition.
Yeah. And I think that kind of brings us back to kind of the foundational economics and what Gumi Cryptos looks for, in terms of some of the foundational economics, right? Which is, I was mentioning that we really look for kind of these arbitrage opportunities, right? And how I kind of reason about arbitrage is I really reason about kind of this idea of like a hydroelectric dam, right? So what's a hydroelectric dam? It's basically a geographic anomaly, right? Which is you have basically it's a drop, it's a gravitic drop, and the gravitic drop is kind of a structural geographic feature, right? And that geographic feature allows you to convert potential energy into kinetic energy, so the water starts falling, right? And then you convert the kinetic energy into electrical energy, right? So it's basically a voltage drop that gets created as a function of a physical drop, right? So, and the physical drop is a terrain feature, right? So the thing that's kind of fascinating about that kind of pattern is that the voltage drop that's being mined by YGG is effectively wealth inequality, right? That's the voltage drop. So the thing that's fascinating, right? So what's fascinating is that like the system as it is produces this wealth inequality, and YGG simply just takes the energy from that. It's like, oh, thank you for creating this,
and redistributes it.
Yeah, it's like, thanks for creating this inequality because we're just going to restore the balance, right? Because in a sense, nature is what's natural is restoring balance, right? So in a sense, like what just like getting hydroelectric, it's just nature doing its thing, right? So you're getting the power from nature. So in a sense, the power of nature is to restore balance, right? Water is trying to seek its own level, and obviously people who are in an economic disadvantage are trying to seek their advantage, right? So in a sense, like, that's what creates the favorable conditions for this kind of sustainable energy, right? Because the thing that's so amazing about our traditional system is that it continues to create and perpetuate inequality, right? So it just means that this is sort of a sustainable power source, and the question becomes, how do you take this sustainable power and kind of use it to build something lasting and durable and, really
and that's where
powerful.
You see the opportunities are, right?
Yeah, absolutely. Right. Because you need a sustainable source of power. And I think this, this ultimately, if you look at blockchain in general, one of the things that you should be looking for are externalities, right? So an externality is basically a cost without a consent, right? So for example, if I'm polluting on you, then that's an externality, right? Because you didn't sign this contract being like, could you please dump pollution on my head? I would love to get the ill health effects and I would love to pay the cost of cleanup. And I would, it's like, no, there's no consent, right? Like that's the definition of an economic externality, right? And the reason why blockchain networks love externalities is because, in essence, the goal is to restore balance, right? The goal is to basically achieve equilibrium, and that's the source of the power of a network, right? Which is the source of the power of the network is, and the reason why is really simple, which is open source has always been a matrix that competes for consent. So when you have an externality, what you have is you have a consent deficit, right? So for example, if you look at wealth inequality, people didn't sign a contract for wealth inequality. They weren't like, oh, I can't wait to be on the poor side of wealth inequality. That'll be awesome. It's like, no, people didn't consent to that. They were like forced into that, right? So then the question becomes, well, is there a way to help people in that externality, right? And then the question, so that's where, basically.
It's a very fundamental, like large picture thinking. And it's funny because in a lot of the circles that I'm in, one of the theories is that, I don't know, especially with altcoin season and Dogecoin and like all of these, there's a massive migration of wealth. Like it's moving from, because there's a lot of arguments like, hey, the rich get rich, the poor stay where they are. But really, there's this opportunity now with these new wealth gaining mechanisms that there's a transfer. And it's, I mean, kind of not the unintended benefit, but it's a very real thing that's happening. Like another example is I know Peter Saddington is working on Emrit, which is like the mining system where people can get, I think it's like $50-$60 a day, but in some countries that's a full day's wage. Like that's a phenomenal income.
Yeah, I think mentioning Dogecoin is super interesting, right? Because when you think about something like a Dogecoin, it's absolutely a game. And the question becomes, what kind of game is it? And it's pretty well known what kind of game it is. It's basically a Schelling point game, right? So if you consult the research of Thomas Schelling, who won a Nobel Prize for this stuff, it basically is a game of coordination, right? With minimal communication or no communication, right? And so the coordination point becomes Dogecoin, which is a meme, right? So it's basically like, let's meet over here and let's, so in a sense, what I would say is that Dogecoin is effectively a degenerate form of the Bitcoin game, right? And I say it's degenerate, it's degenerate in the sense of degen culture, right? But in a sense, the thing that's really important to understand is that it's in a sense pure speculation. There's no investment, right? It's only speculation, right? And the distinction I'm making is a speculation is only about what you think other speculators will do.
Yes.
Right. Whereas investment is really more about kind of fundamental either value or growth properties of an asset, right?
Yep.
And
this is like self-fulfilling prophecy type of.
Correct. So what, I the other day I tweeted that you can only speculate in memes. You can't invest, right? You can't invest in a meme, right? And the obviously the logic behind it is that the meme is like a brand, right? And so because of that, it's inherently speculative as opposed to being, having any kind of utility function, right?
But there is a brand new set of investors. So this is actually something I talked about with a lot of influencers in the crypto space. There's almost this new segment of investors coming in that are driven purely on speculative hype, and they're doing great. Like
they are until they aren't, right? And that's the thing that's concerning, right? So for example, in the recent dip, right, what we saw $10 billion of liquidations, and the largest liquidation, which was on Binance, was about 68 million, right? So to be perfectly honest, if you look at the largest as being, more than 1 million accounts were liquidated, right? So it's a huge number of accounts, the largest of which was 68 million, right? So to me, if you look at numbers like that, you're really talking about an incredibly long tail of over-leveraged investors, right? So to me, that's not institutional investors in large part. It's retail investors being over leveraged and kind of wiped out, right? So I would say that like it's sort of play stupid games and win stupid prizes, right? So to me, I feel like the danger in like a Dogecoin is that since there isn't a fundamental, right, then it's, like at least with GameStop, like what happened was that, the board got replaced, and now like, the management is being replaced, and now the company is trying to reposition as an e-commerce company. which is like almost like a material change as a function of all this craziness, right? The CFO resigned. Like, so in a sense, the thing that's crazy is that the company is kind of feeling its oats and it's gaining a new lease on life, and it's trying to reinvent itself because it now realizes that it has power and it's alive, and it's it's sort of reinvigorated and reinvented. So it may actually start to kind of earn its enterprise value and PE multiple, right? So in a sense, it may restabilize at a higher mark. Yeah, but the point being that Dogecoin isn't going to do that.
Yeah, I see
right?
what you're saying.
That's the problem. The problem, like if you go into GitHub, like, and you look at their pull requests, right? Like they're handling pull requests like things like Catcoin is better than Dogecoin, right? And they're like, okay, accept or whatever. So like, there's very, very, very little there, right? Yeah. So so for if you go to like Jackson Palmer's Twitter, it's like, oh, you can follow me. I don't tweet much, but you can follow me on this blog. And you go to the blog and it doesn't say anything about Dogecoin. Like he's less involved in Dogecoin than Satoshi Light than Charlie Lee is in Litecoin. So like, Dogecoin is like, it's kind of a dead end.
Yeah.
And in a sense, it's degen, right? But what function is it doing? It's part of an experiment, and it's an experiment. And I think to me, it's a degen culture export, and it's taking the social media part of the Bitcoin protocol and it's extracting it into a separate asset. So in a sense, it's more like a sort of semi-violent part of the revolution, as opposed
it's kind of like it's like an underflow, like that's happening as.
Yeah. Cause I mean, I feel like there's different, the spirit of these things are very different, right? In the sense that like, if you look at the spirit of like an Ethereum, it's kind of like, we're going to build something that's better, right? We're going to build a superior system to the existing system, and that's how we win, right? And and I think Dogecoin, the spirit of Dogecoin is more like we're just gonna fuck this place up, right? So that's
I see.
That's a different sort of an energy, and it's both of them have kind of a revolutionary spirit, but they're quite different. And I would say the Dogecoin spirit it's not a nonviolent thing. I mean, in a sense, if you look at it, there's a lot of kind of like, there is a lot of resentment and anger and trauma, in such behaviors, because it's sort of like, the system itself has been so unrewarding that this is kind of like an outlet for all of that energy.
I actually see that as like one of the trends that, especially with like Wall Street bets and like these people that have they have a lot of energy and they have a lot of potential, but the current system just didn't give the reward mechanisms that they're able to get with this. So they're pouring their energy and their life savings into it. But it really is. I like how you said experiment. It's like unfolding before us, right in front of us, and it's like we're paving a brave new world.
The timing is interesting, right? Because obviously tomorrow is 420, so-called Doge Day. And it's funny, right? Because the goal of 420 was, first of all, to like make a marijuana reference, but second of all, to kind of like pump Dogecoin to $1, right? But like, it's super blindingly obvious that it won't reach $1. Like that's not going to happen. Right. So, I think what's going to happen is kind of this bizarre goalpost moving kind of QAnon type effect where like, they're not going to make it, but it isn't going to dissuade a lot of people. In a sense, it's just flexing, and I think, the reason why I'm slightly discouraging about it is that Dogecoin is starting to bite everyone. Right. So if you go to something like a CoinGecko and you just kind of look at what different things are doing, you can kind of see very clearly that like Dogecoin is sort of pumping, but that, everything else is kind of falling off a little bit, in the top 10, right? So in a sense, like Dogecoin people are selling Bitcoin, they're selling Ether in order to buy Dogecoin, right? So in a sense,
it's messing the markets a little bit.
It is, and it's kind of like increasing what I call the nihilism index, right? And the nihilism index is kind of like, if you click the 24-hour growth metric on CoinMarketCap and sort, like how many shit coins are in the fast growing categories, right? So if all of the things that are growing are shit coins, then you have what I call a high nihilism index, you know, and in a
Oh.
way it may be a kind of a sign of potentially like bubble bursting mood.
I see, like the
There's a sort of a
sentiments.
desperation, and there's sort of a, you know, it's not a mood of like investment. It's not a mood of like, let's continue to build better systems. It's more impatient, right? I mean, life is a series of decisions of when to be patient and when to be impatient, you know, and
Miko,
in a sense,
you're so well. You speak so well, and I feel like you understand like the human thinking behind it and the motivations. Like, I'm personally curious. Like, what got you to the point that you are today? Like, how did you get so smart? Like, how do I do
that's
that?
funny. That's a very funny thing to say. I really appreciate it. I mean, for me, part of it is just kind of temperament. So, you know, I think for me, I'm a kind of a psychologically minded person. So I kind of try to reason on first principles. I think part of my background and training is in kind of the natural sciences. So I think I
Mm.
definitely kind of try to force a discipline to think about and reason about things based on first principles, you know, so that's all, those are kind of the mindsets that inform sort of how I build my models, right? But I, you know, as an investor, I think it's super important to kind of have a really healthy dose of humility, right? Because in a
Mm.
sense, Peter Thiel said it beautifully in Zero to One, which is the investor is the one who doesn't know, right? So in a sense, like, and that's why they diversify, right? Like if you know, if Peter Thiel knew what to do, he would have invested the entire founders fund into Facebook, and he would have just said, all the other portfolio companies can go to hell. Like I'm not putting a penny in anyone else. I'm just putting everything into Facebook,
But
right?
you
But
don't know, right?
correct. That's the whole point. The point is that he didn't know, right? And
Hmm.
the point is that like, in a way, an investor, the act of professionally investing is the act of declaring that you don't know, right?
That's like actually pretty good. I like that.
Because if you knew, you would actually just go do that one thing,
Yeah,
right?
yeah. Instead
You
of
wouldn't.
spreading, like
Yeah,
portfolio theory and putting X amount in alts and like,
you would never
yeah,
diversify. You would never, because you know, because you just be like, I know exactly what's going to happen, and I'm just going to do. I'm just, you know, and that's what an entrepreneur is, and that's why entrepreneurs are the scarcity, right? Whereas
mm.
investors are not the scarcity, you know, and that's all like, you know, in Peter Thiel's book Zero to One. He's a strange fellow, but the book's good.
But filled with wisdom. I love that book, and
Yeah, it's a good book.
that's a good comparison. But I know we're coming up on time, Miko. I don't want to take up too much of your time, but I do have to say, like, um, I feel like you also have this like natural curiosity to dive further into concepts than most people. Um, I truly feel that when you're breaking down topics, like I feel like you personally are just so curious that you figured it out.
I appreciate that. I mean, I definitely want to make sure that like as a professional investor, like, you know, I absolutely kind of have to retain that level of humility because in a sense, like, you know, you never have the world is always much more complex than any individual is able to have figured out, right? So all we can do is develop models and theses, you know, and we can start to kind of hedge. We can hedge in favor of those theses, and we can also hedge
Mm.
against them. So we can be like, well, if I'm wrong, then I'm going to put a little hedge over here and we'll see, you know. So in a sense, it's sort of almost like a meta intelligence, right? Which is kind of knowing how stupid you are, or, you know, how fallible you are. Like that's more like the mood. So, you know, I think that becomes kind of a meta pattern, you know, but I would say that, you know, that's definitely built in, you know, so I think it's important to be kind of, you know, scrutinize your thoughts and scrutinize your models and just understand that your models are models, right? Like,
Mm.
you know, and your models are never the actual thing. The actual thing is always like much more complex than any individual human can fully comprehend.
I love it. So, Miko, I always want to end on this question because a lot of people are. I always say the best investments are when you co-invest with the smartest people. And like, what are those projects that you're working on that you're just like, you wake up and you're like, this guy is changing the world? And like, where are you looking at? What kind of projects excite you, and what are you currently investing in?
Yeah. So I think obviously if you look into the portfolio, there are these kind of super obvious what we call Gumi corns, you know. So if you look at
Unicorns.
Celsius, like it's truly bananas. Like every time I say, oh, they have 15 billion asset under management. Like, every time I stop to say that, like they are have 16 or 17, or so it just keeps like compounding in a way that is like, mind expanding. So, I think that's an obvious kind of Gumicorn. When we think about OpenSea, that's an obvious Gumicorn. I think the thing that's more important to look for are these inobvious Gumicorns. Like 1inch is an obvious Gumicorn. So we have a lot of these obvious ones. I'd say the inobvious ones, like YGG, is definitely goes with that tweet. Few understand. I'm really glad that you get YGG. Other ones that we're excited about. We think Vega is a huge few understand. We think Agoric is a huge few understand. So we're definitely looking for all of these really kind of up and coming.
And why? Like
projects.
What makes them? I know we kind of talked about the arbitrage, but what makes those, like, what is that theme that you feel like, hey, these are the hidden ones that are just gonna, the potential?
Yeah, arbitrage. It's all arbitrage, right? If you look at Celsius, it's all lending, right? And what is lending? I think that Sam Bankman-Fried from FTX said it super beautifully, which is that crypto nerds want to be long 4 trillion. And the market only has 2 trillion of asset, right? And so in essence, traditional finance is only willing to loan these crypto nerds 500 billion. So what's the rest? What's happening? What's happening is that there's just this hunger for more and more and more leverage. Now, a little bit less than there was like last week, with this $10 billion leverage blowout, but like, that'll come back, right? So in essence, the thing that becomes important is, what is that? It is an impedance. Right. That's an impedance. Right. So then so to me, something like a Celsius sits at that impedance, which is the yield impedance, which is really an impedance between traditional finance and DeFi. So that's a beautiful boundary. And it's one that kind of perpetually generates like huge energies. Right. So that one's kind of an exponential function, So when we look at all these things, like, in a sense, some of these core principles always apply. We're always looking for these kind of voltage drops. We're always looking for these kind of really, and obviously it's not sufficient just to have this theoretical idea of, there's something here. You also have to find these like Gumicorn entrepreneurs, right? You have to find the people that can actually like understand and build, and really
execute.
Amazing. Yeah. But I mean, if you look at something like Agoric, like it's sort of an overnight success that took like, 30 years in the sense that these guys were publishing papers on smart contracts, that go back to like 1997, some of the early Nick Szabo smart contract papers, Mark Miller, so in a sense, like these are super deep kind of infrastructure people. So, I think Agoric is definitely one to watch that's going to mainnet. Vega is definitely one to watch that's going to mainnet. So, we have some really exciting portfolio news up and coming. So, it's definitely been an incredibly
stay tuned.
Fruitful time. Yeah.
I love the parallels that you're drawing. I guess it's from your natural sciences background, but like, this like geographical changes that can cause this arbitrage. But even I like how you said it, kind of like these borders between, like, I think of it like natural ecosystems.
Yes.
These borders are where like evolution happens, right?
Yes.
Like, let's say the edge, ground to water. And I like that. I like that drawing that you're just painting in my brain. It makes a lot of sense.
I mean, if you look at, if you look at things like underground geothermal vents, you get these really odd creatures like, Thermus aquaticus.
The Gumicorns come out of there.
Absolutely, right? You get these really evolutionarily advantaged creatures, right? So, I think that it's really that where you meet kind of these really exotic boundaries, right? So I think, the boundary of land and sea and air and water and fire and all these really interesting boundaries, right? So in a sense, like that's a fascinating one. Another one to watch is Zanpool. Zanpool is amazing because they're bridging traditional finance. They're basically making liquidity providers out of small businesses and individuals who don't actually even know what the word DeFi is, right? Like that's a beautiful, amazing thing, right? So they've created this kind of payment network that's Visa-like, but it's actually powered by people that aren't. They're just yield collectors. They're just random businesses and people in South Asia that just want yield, and they don't even know what they're, they just kind of connect in and they're like, wow, this is, we're getting so much yield just by connecting our bank account to whatever this thing is.
That's so funny because banks have been doing this traditional financial systems have been doing this for a very long time, except they don't share very much with the they don't share very much on the other end. So I love that concept. But Miko, I have to say, we're running out of time, but I feel like I can talk with you forever. And thank you so much for dropping so much wisdom. How do people follow you? How do people keep up with you?
Yeah, I appreciate it. So, easiest way is I'm Miko Java, Java on Twitter. If you go to miko.com, miko.com, all my social accounts are there. Everything is there. My YouTube show is there. So, you can kind of see it all. And, I think it's really, would love to kind of have some folks come check it out.